Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. It's Thursday. Yeah, it's going to be a 3-day weekend again, and we're looking forward to it. And what do we have going on today? Well, let's get there's the dollar index. And that's Brent. I thought I had the dollar index up there. Let's check it again. There is the dollar index right there. And you see just very tight. It's it's been going sideways for the last couple of days. Let's see, put it up over here, right there, and see the dollar index right there on the other platform. So J4X has it moving down. You got the fast out, the stochastic on that at 27. You got the slow at 24. So it's still trying to turn. You can see over here, without the hinky ASCII, that's what the red and the greens are, is the hinky ASCII. Oh, let's check the chat line too. Let's go to the chat line. Let's see, let's minimize that. Let's see, go like, okay, I can get rid of that. Where's the chat line at? There we go. And let's see, I got a commercial going on right now with the chat line. I'm sure it will pop up any second now. There we go. And I guess you can say over the last 3 days, or last 4 days right here, you can see we've been kind of towards the lows, but we haven't taken out this low yet. Looks like the dollar index went into the sell yesterday right there. So we'll put the little red line back in there again. And there's Robin. Good morning, Robin. Winter solstice. Yeah, I'm looking forward to that. Happy winter solstice to us in the northern hemisphere. Yes, indeed. The moon was very bright because we're pretty close to the sun. And just happy to see things marching along the right way, over on let's take a look at the beta. Get the beta up on the screen and see what it looks like this morning. Right there. And there is the dollar index. Let's put it up on the screen for you to see. Right there. And there's the beta. Let's make it bigger too, like that. There we are. You can see pushed back into the sell after going into the buy like 2 days ago. I don't think this is updated yet. That's just the is that the 20th? See what that is. That's the 19th, and then this is the 20th. I guess today is the 21st. Okay, so you can see the weekly's still in that long sell. That it's been in long sell for 10 weeks. But it really doesn't go much. I mean, it is down. There's no doubt. You can look at it again on the J4X here. You can see that slow, steady slide down. But we're not getting any real heavy selling out of it all. And I don't really see a weak dollar. I just see a dollar that's being, just backing off. That's about it. And, economists they're all over the place. They don't make a lot of sense when it comes to the dollar itself. To me, the dollar looks relatively fine. The fact that it's over 1.00 says a lot to me. It's if it was at like 92 or 88 or something like that, I'd be much more concerned. I don't see that, and I'm not sure why they get so panicky over here about it, but they do. A little sip of the coffee this morning. There we go. So, that is the dollar index. And is there anything else that can be said about it? Not really. Like this, if we'll see if it takes out these lows. Let's see, go like that. See if it takes out these lows right here. I don't think it will. I think it'll just bounce around. I don't know. We've got what's today? Today's 21st. Basically, we have something like was that 4? We have 5 trading days. There's 6 trading days to the end of the year. So Any tax selling or anything else going on will have some type of pressure on it. Let's see. Robin says, "Hey, come on, we cover just about every market out there. Ask a questions. I like that. Push on them, Robin. Make statements. No holds barred. Yes, challenge anything. Be my guest." What else can we say about all of that? Unfortunately, the media and the corporate media in the United States anymore is more geared towards not telling you the facts and information as much as it's geared towards putting a spin on and promoting a political agenda. So it kind of does make it a little sloppy, a little confusing. The national media is trying to tell us that the dollar is in really deep trouble. I'm sure everybody would be happy to see their currency trading at not that far off from all-time highs. We're about 12, 13%. And I would say that the euro is something like 40% off the all-time highs. You can see a lot of these currencies having their issues. Look at the yen. The yen trading up in the 140s. It was at a 45-year high just recently. Just looking horrible. So, oh, there we go. Mohammed, all right. Hey, how are you doing? We're doing fine. We're just looking for, different things to look at. We go through a rhythm every day. We look at the dollar, then we go to the euro and the cable, and then from the cable we go to the Swiss and the yen, and then we look at the great experiment called the Turkish lira against the euro, and then we bounce over to the South African rand as the number one brick currency in the world, and then we slide into Canadian, and then we go into the metals complex. So we're just looking for anybody that would like to see something a little bit more interesting. Maybe they are interesting. Maybe we're so lucky to be able to have the have the solid direction of the markets. 86% of the time. It's just makes us spoiled, I guess you could say. And we use 3 different platforms here. We use Dukascopy's J4X platform. We go over to our new beta one that you can see on the screen at the moment. Then we go over to our older platform that we're going to try to move away from in here. And so, it just we're kind of spoiled. It went into the weekly sell here. You can see nothing goes in a straight line, but that definitely goes down. That's why we're in a sell. Or we go look at another product and say the case of the euro. Let's put the euro up there. And we'll put it up here. And there is the euro dollar pairs trade right there. And it's been in a weekly buy way back in here. And you can see it's gone up in direction. And we'll put it up over here for you to see even more. Let's see, where are you? Oh, we gotta go do that, don't we? Okay, let's do that. And what we'll do is we will put it on here instead for the moment. And there is the euro. Let's give you the euro. Right there, this is the futures contract that trades on the Chicago Mercantile. Or we go look at the spot contract itself, trading in the interbank market. And let's see, right there. So you can see here, I'm fighting a little cold here. You can see it's been in a weekly buy for almost 10 weeks now. At the same time, you can see when it went into the weekly buy back in here, it's had an upwardly direction. You have some, like there was a daily sell there, but it never made it into the weekly sell, and it turns around and gets back into the buy, and it's a good trade for the upside. And then we go over to the other platform. Woo. Little sneeze there. And there is the euro. Same thing. We went into the weekly buy back in here. And you can see it's in an upwardly direction, even more clearer. So we're always just like looking for new ideas, something to look at, see if there's something we haven't seen. And that's really where we're headed all the time. We're always looking to see if someone has an idea that's worth, looking into, to trade on. We're always looking for the better trade, the better opportunity. There's so many products out there that it's very hard to look at the whole universe, but we look at it like the way America is supposed to be. And that is, free people, free markets, free ideas, free speech. And so we're looking to see if you spot something that might we have not seen. Could you give a fast explanation to the indicators on your screen? What they mean? Sure, that's a great idea. All right, over here on the J4X platform, right there. Okay, that's the euro. We're using Hinky ASCII bars on the euro to emulate our red dots and green dots. Okay, right there, which is on that situation right there. We're looking at the fast stochastic, and let's give you even better. You can see it's a. Let's see if we can do this. Edit indicator. There's a fast stochastic, and it's a 5-3 right there. And that's trading at 74.3 point something or 0.3 something. And you can see the slow stochastic right here, which is trading at 70.72. As long as the fast is above it, it's bullish, and when it's below it, it's bearish. This is the daily. We're looking at a daily chart at the moment. And show you the same situation. It's a 5-3-3 on the slow stochastic. So we actually are overlaying two stochastics. Yeah, exactly. That's the way we look at it. Now this is the platform from Ducascopy. These are public indicators, and we show that you can actually build a decent, public indicator that will give you some solid direction. Much better. This is a higher statistical. These put together is better than MACD or Bollinger Bands or trying to think what else. We've not seen. Well, the Market Technicians Association in the world claims that stochastics is a lagging indicator, but when you put two of them together, they become a very accurate leading indicator, much more leading than, say, moving averages or, as I said, MACD or parabolic or, Bollinger Bands, standard deviations. And so this is a good public indicator. When you combine all three tools together, the Hinky ASCII, the fast stochastic battling against the slow stochastic, that's a really good tool. Okay, now what we're trying to do is we're trying to take a public indicator and make it act or emulate like our proprietary one is, like right here. So you see here it went into the buy, goes through the zero line on the daily. This is a daily algorithm, and this is a weekly algorithm. And so the daily goes into a buy right in here, and it's above the zero line right there. And sometimes you get some red dots out of it, but overall it doesn't take you out of the buy because there's a green and a red there. So if it had just been a red, it would have put you in a daily sell. Now, at the same time, we look at the weekly, and we want the weekly and the daily to be working together. So in other words, once we go into a weekly buy, we only take daily buy signals, and we don't short the sells. We take profits off of them, or we hedge ourselves on the long, but we don't go short. And then you can see where it jumps back into a buy right here, and you can see the upwardly projection again. So you couldn't be short in here. You could be flat, or you could be in a binary, because you can't get stopped out in a binary. And this way, you're trading overnight the trend, and it can go on for days and weeks. As you can see here, the trend has been since the area down in here in a weekly buy. So that we keep on telling people, well, it's in a weekly buy, which means the trend is in a weekly trend up. And there's times where it shows weakness, like here. It gave us a warning that there was daily pressure, but we still stayed above the zero line. Now, the bluish dotted one is a fast stochastic. We don't trade off of that. We treat it like a warning. We trade off the slow stochastic, not stochastic. I'm sorry, slow. It's not a stochastic. It's our algorithm itself. It's a combination of proprietary mathematics. So it goes into the weekly buy. To be exact, it goes into the weekly buy right here through the zero line right there. Goes into the weekly buy there. It's in a daily buy, so you can feel comfortable being long at that point, and you get some strength out of it, and it's a win. And then you have here where it goes into a daily sell, but it's way up there, so you're not going to take a short. Instead, you'll just stay long your position or hedged, with a put option type of thing or a binary. And then you can see it goes off again on the upside here. And then we go into a sell here, and that lasts for 2 days right there. But it's not something you trade again because we're in a weekly buy. You don't fight the weekly buy. You only trade the daily and the weekly in the same direction. And so it goes into a daily buy here. You're already in the weekly buy. You can be long, and you see again another winner. Then you get into a sell again right here on a daily basis, but still in the weekly. Now, you can see the fast breaks down through this manifold here. It's a standard deviation with our mathematics combined together. And you can see overall it breaks, but the slow does not. The green and the white histogram does not. So what happens is in the end result is that it's still a long. Then it goes into a buy right here on the daily, and if you were hedged again, or if you had a binary on, you barely are getting punished for it because you knew it was going down, so you're basically flat or hedged. And then it goes back into a buy again right here, and you can jump on more, and it takes off again. And that's what you're looking at there. Now, we have a new platform we're building ourselves. This one's all us. And it has the 3 here, and the clients will be able to look at updates, and it's going to be powered by Ducascopy data, live information. We're get that worked out, and you can see this is the daily right here. This is the chart itself for a daily, and then you can see this is the intraday algorithm that just like right here, intraday algorithm, and then we go back, and this is the weekly down at the bottom. So you have the weekly and daily, and the chart itself, and the dots and so forth. And so it's trying to emulate this, and we've been back testing it now about 5-6 months live with everybody in front of us. I hope that helped you out, Mohammed. And if you have any questions, just fire them out. But I think that's the best way to describe our work. I'll give you a chance. I'm going to shift over to the British pound while you type in anything you'd like. Right there. There's the British pound. You can see that's been in a weekly buy since back in here too. And it's been climbing up more than it's been climbing down. Higher lows, that type of thing. And there was the daily buy right there. And it had that run from there, and then you have let's see, what is it right now? When you have a green and a red, it's still in the buy, and if it was a green and a red and we were in a sell, it would be still in the sell. Let's see. Muhammad says, from your opinion, is it better to take a bias based on the indicator action or the candles on both? Let's see, how do I describe that? Okay, we're not using candles, and over on the J4X, it's a Hinky-Ashki, so it's not really a candle. I think or maybe it's a candle squared or something like that, like in atomic theory, where they have a habit of squaring things and then dividing, that type of thing. But no, we use that as a public indicator, saying if you're not using our work, you can use a public indicator that is only 2 or 3 hours behind, and that's what the J4X is showing. Okay, excellent. And so I do like candlesticks. I don't have a problem with candlesticks. I think the candlesticks, it's like a 500 or 600 year indicator. It's been used all the way back into the 14th or 15th century, maybe even as far back as the 13th century in Japan for trading rice. So I don't have a problem with candlesticks. It's just that we're not using candlesticks on our proprietary work, and we're using Hinky-Ashkis to smooth out the like the match up to our green and red dots. I hope that answered your question. If it didn't, just ask it again, or ask it any way you want. Really, it's no problem. We have no problem answering questions. We always say that there's no dumb questions in money and trading. There are only long answers or short answers. That's all it comes down to. So, so. All right. There's the cable, and we'll put the cable up on J4X too at the same time. And there's the cable right there. And you can see the fast stochastics at 40.823, and the slow is at 50. Is that 50? I think it's 50. Yeah, 50.375. So the fast is below, and it's a bearish thing, and you can see the weakness. It's trying to kick out. Over here on our platform we use every day with our proprietary work, you can see it was in a sell for 1 day right there. It didn't get in there because it was a red and a green. It was took yesterday to do it, and you can see it's already trying to bounce back up. We put the little lines in there just to remind people, because they may miss the not look so closely at our numbers. But you can see here it's trying to get back into the buy today. No way you would even try to take a short out of it. If anything, you would have taken a profit from here or somewhere in all this, that type of thing. Especially with the red and the green, you would have taken your profit from the buy here, there, and or up in here, or somewhere, or a stop around there, or whatever. In the end result, you can see pretty hard to lose out of that whole trade, and so it gets into a sell officially here, but you've already taken your profit a day earlier because of the red and green. At the same time, it's still in the weekly, so you're not trying to get shorted at all. You can see right there. And so that pressure is the upside. Excuse me. Fighting a little cold there. So that's the action we're seeing there. There we go. So I would say that, if anything, the pressure is still on the upside. You can see here on the cable, just as the slow bounced off what we refer to as a nonlinear time manifolds, or the manifolds right here, the yellow mirror image lines. It's doing it again now. It's trying to bounce. Now it tried to do this. It tried to break it here and started climbing back up through it. And sure enough, we were getting that bounce out of it. And so, right now it's looking very strong, the cable against the dollar. Let's see. Mohammed says, from your opinion, is it... Okay, no, I did that. Missed the start. Hey, Janos, how you doing? Any comments on yesterday's drop? No, I haven't even thought about it too hard. It's just you got to figure we're at all-time highs. And what were we even down 2%? I don't know if we were down 2%, were we? It's pretty hard to get too serious about. Let's see. On a 27,000 point index, a 10% drop, or say, let's put it this way, a 5% drop would be 5% would be 50 points, is it? To 1,000? Right? So, it was like 2% drop is nothing. It's after being at all-time highs. I just, someone's taking profits, or concerned about something, or nothing major. Right now, let's see where the stock market is as we speak. Oh, lost that one. Let's put that back on my head. That was the headphone set. But let's take a look at, what are we looking at here? I think I'm loading something up, aren't I? What am I loading up here? Oh, I see what I'm doing. I'm going over to, no. I'm trying to go over to here. That's what it is, right there. Here's the stock. This is the S&P 500. So you can see, it's been in an intraday buy now since yesterday afternoon. It went into an intraday buy around 5 o'clock, I guess it is, and it's been in there ever since. Here's a this is a was it this is a 18,000 contract chart, tick chart, and this is a 2,000 over here on this one. That's the 18,000 over there. So you can see it's been in a daily buy since right there and been moving up. So yeah, but overall I don't take it too serious at all. Let's see, dollar's looking new weekly lows. I'm not that concerned about the dollar. The dollar seems to be, it's, as far as I'm concerned, it's overvalued to begin with. So it's hard to take it too serious. Let's see. Muhammad says, I guess your answer will be catch a trend, but in this case, what do you think can make us away from the consolidation? Move away from this consolidation? That's a good question. I would imagine the first of the year. I think most of this consolidation is from taxes. You'll be right back, Robin? Cool. I think that's the best way. I'm fighting a little cold here. But I would say that this is all just end of the year, window dressing on one side of it. The selling yesterday is minuscule, overall it's not big, it's just, it wasn't it's not like it was down 2,000 points or something like that. They talk like it is, They act like it is, but it wasn't. It's just down a couple percentage points. That's it. So, let's see. And I think today it's halfway back or something like that, the last I looked. Let's take a look and see. Right there. Let's see. Yeah, so you can see here, this is the S&P 500, and we can go look at the, I'm not sure what that was all about. What is that? What the product is. Did I hit a button or something? Let's see. Ah, I did. I hit a button. Okay, so we have to put the GBP back in there again. Oh, that's the wrong page too. Let's see what we got here. There we are. So let's get GBP back in there. And right there. And GBP. There it is. There we go. That'll straighten out now. So there, yeah. So what we're looking at now is what the Dow Jones is up like 0.4%. Not even 0.5%. It dropped yesterday. A little under 2%. These are not. These are things that not to be worried about. Now, if they do that for the next 3 or 4 days, then you start to worry about it. But right now, I don't see anything particular. Maybe it was FedEx. Could have been just as simple as the FedEx getting beat up yesterday. That alone, when that's the basically one of the biggest in the Dow Jones Transportation Index. And so when they saw that, they think, okay, deliveries are not happening as much, the economy's slowing. The Federal Reserve out of Richmond has been saying over and over that they believe that the economy is going to slow more over the next 3 to 6 months. So, it could be just that, but we follow our math, and our math is usually, 9 out of 10 times right. So, It's pretty hard to worry, at least for us here at the Dukascopy webinars, and this one in particular. It's pretty hard to be too worried about it because we're usually in the right spot at almost 9 out of 10 times. Can't complain about that. After that, Robin usually jumps in and says something like about good money management at the same time. In other words, using stops or marrying options to underlying product or something like that. The Dukascopy Academy. Oh, nice. I saw you saying something about that. Yeah, here at the Dukascopy Academy. Exactly. So, I don't take it that serious. The media does. They get nuts. 1% moves in the market is like, oh my God, they're just like screaming from the rooftop, like as if the world has come to an end. Not here at Dukascopy Academy. We're not afraid of the market. We're comfortable with the market. All right. So from there, let's see where we go from there. And that's the cable. So from the cable, we'll jump over to the Swiss franc. And there. All right. And so you can see right here, Swiss has been in a nice glide down for, like, it's right from this top in here, in the 92s, compared to last year when we were in the 102 area. Over here, let's put it up on the screen. There's the Swiss. You can see the Swiss has been in a weekly sell since the 90-ish area up in here. And let's see, move that line down. That's the zero line right there. So you can see the pressure has been going on from this 90 area, and we've now down into the 85, high 85s. We've broken through the 96. So the weekly trend itself has been down now for 3, 4, 5, 6, 7, 8, 9. This is the 10th week. And, remember, you don't have to remember, I have to remember, but in the end result is that all you traders out there, we are on YouTube. This is documented, not by me, not by Dukascopy, but by YouTube, an independent source. So, you can go back and look at our historical accuracy. In other words, we're heavily bench tested. That's what it really comes down to. We bench test our work every day. We even send out a spreadsheet showing the success and failure of it every day for decades. So, it's a... that's our opinion, and unfortunately, the Bloomberg website now and the CNBC website, or and the Reuters website are just spin machines. They don't really give you much accuracy anymore. And if you go back and look at what they said 3 months ago, 4 months ago, 2 weeks ago, you see things totally upside down from what they said. So in other words, they'll say something just to make it politically correct, but they won't be giving you good market information. I can't even watch Bloomberg anymore. It's so sad to see an organization like that go so awry. Same thing with CNBC, how bad it's gotten, where it's one-sided. It doesn't make any sense anymore. So that's the attitude I have about it all. And Dow's up about 140 points. It was down 400 and some odd points, so it's up 37 points from yesterday, 36 points from yesterday. So it's not that bad. Yano says, I haven't watched those services since 17. Yeah, same here. They've just gotten so inaccurate. Utter nonsense. It is. I've seen people now, I've seen money managers, finally, I'm seeing money managers actually say it out loud live on TV now. I've been amazed how long it went for, half a decade, basically. It was like once Trump was elected, they went nuts or something. So, matter of fact, they would never mention half the things he was doing. They would, and they were good economic policies. We're living off of them now. They expire in 2025. So, What it comes down to is uh, we try not to take them serious anymore. And we feel sad for the horror of losing competition in the marketplace because it's necessary. Good competition is important. Nonsense. Pushing stocks, helping the sponsors get out of positions. Yeah, exactly. They are literally working for the top of the top wealthiest in the marketplace. We might dig into their finance and see what's it. Oh, front running. We call that front running on the trading floors, and we've seen front running for years, decades. And we asked the Securities Exchange Commission. I fought with the Commodities Futures Trading Commission about it. They don't want to hear it. They're not interested. Not interested whatsoever. Let's see. Let's see. They are literally working. Let's see. Top contributors, federal election data. Oh yeah, it's horrible. Just horrible. Let's see. What was that? Tech Bridge, 900 Marshall properties less. Morgan Chase. Yeah, they're all in there. Oh look, J.P. Morgan. What a coincidence. Wells Fargo. Oh no, yeah. I know. It is. You know, the only way you can have a good marketplace is where you get all opinions, good, bad, or indifferent. You want everybody's opinion, and then let history show, be it 2 week history, 1 week history, 3 hour. Like here, it's just here's a perfect example of how we live on the academy here. All right, here is an intraday tick chart. You can see this one is still in the buy. It hasn't that in this case here, right here, that here. Let's make it bigger. It has to have both bars through the zero line. So once it went through the buy right there, it's in a buy. When it went into the sell, it went into the sell right there. Didn't go back into the buy until right there. Went into a sell right here. Went into the buy right there. It was a small buy, but it's a buy. Went into a buy right here. It was a small buy, but it was a buy. Went into a sell right there. It was a half decent little sell. Well, this one was really good. This is yesterday afternoon. This is showing yesterday's market move. It goes into a daily, an intraday sell. This is an intraday sell with our algorithm. And you can see it stays into that sell all the way down to this bottom right here. And that's kind of like the A, and then this is the B, and then we go into like a 5-way down. You go into a sell here, and then it gives you a little buy there. And then when we go and look, this is a 2,000. I'm sorry, this is 18,023 ticks or contracts. 18,023. Let's see. Yeah, Comcast is owned by CNBC. Exactly. CNBC is a division of NBC Universal News Group's a subsidiary of NBC Universal, which is owned by Comcast. Exactly. As we like to call it, something else with it sounds like com. Instead, it comes with a O. Com. U. Yeah. Anyway, owner Brian L. Roberts, equity interest. Yeah, the last guy. I forget what his name was. The last chairman of Comcast was the vice chairman of the Democrat Party. That's why we're calling it over here now corporate media now. We don't call it news. We call it corporate media because it's just all spin. All right. So, yep, that's what we do is, we have short-term history here. You can see our work, and you can go even in a shorter one. This is a 2023 tick chart. Went into the buy right here. We don't pay attention to the dots on these. And then it went into the sell right there. Right there, 4 back, yeah. Right there. Fell a little bit. And it's trying to get into the buy. It's still in the sell. Because this, you can see there, the slow was at 05 minus. The green slow was 10 minus. And then the blue is at 17 plus. So it's still in the sell. So it's been in the sell from here. Popped up over it a little bit. And we'll see if they bring it down or go up or, whatever. But in the bigger case, the longer term intraday trend is on the upside. So that's where we stand with that. Let's see. Roberts is considered a supporter of the Democrat Party and supporter of Hillary Clinton. And 16, yeah, it's just the corporate media spin. That's all it is, to keep themselves in power. Nothing more than that. Yeah, that's wild, isn't it? 1% in stock, 33% in voting power, and that's what we're battling with over here at this point. You know, the corruption. It'll get cleaned up. It will get cleaned up, and things will straighten out. I thought the markets were rallying because they were interpreting, Mr. Trump's victory coming in 9 months. He is polling so big. He's never polled this big before. I mean, he is flying. Oh, what do you doubt, Giannis? You don't think the markets were moving up because of the anticipation? Yeah, what do you doubt? So from there, so Muhammad, that's what we're doing. We're always looking and back testing and showing the success rate. That's how it works around here. All right, from there, the Swiss, as you saw, let's get Swiss back up on there. You see, it's looking very firm, very steady. No doubts at all. I think the U.S. is in a decline from what I heard from my friend that works as a contractor in the U.S. Right now, it's in a recession. It is. We are in some type of recession. I ask for the average workman's input from him. Well, they're frustrated. Everybody's frustrated. They know that things are sloppy. They're wrong. The borders are open. So yeah, everybody has that attitude. But I think now with Mike Johnson as the Speaker of the House, he's going to hold the president uh, responsible. Finally, yeah, Republicans are not really that good at holding people responsible. They just like to do their thing and go. Now I can see here we're 42%. We're up 0.42%, 4/10 up from yesterday. So before you know it, we're going to be, you know, halfway back. It's like I don't take it too serious. All right, what else we got going on here? Uh, from there, we go over to the yen. Let's see what the yen looks like right there. Mr. and Mrs. Yen. There it is. I heard a ding somewhere. Ding a ling a ling. Ding a ling a ling. Ding a ling a ling. Let's see. Uh, there we are. So, what else we got going on here? So there's the yen, and you can see the yen. Let's put up on J4X also. Right there. Whoa! Right there. There we are. You see the yen is coming down off of that 52 area. We've gotten down as low as like 40 and change. Over here, we're just flirting to get back into the sell. It's very tight. You can see it right there. It's at zero. Right there. It's at zero. You can see it right there. 0.01. Very close to going into a sell. You can see it right there. It's pressing down. We widen it out, give you a better view of it, like so. And there's the zero line on the weekly. We've been in a weekly sell since the 50-ish area. There's the 49 area, something like that. We went into the weekly sell, and when we tighten it up just a little bit, you'll see. We went into the daily sell day after the high. There we are. And you can see here, you have the yen going through a lot of political turmoil right now. They've replaced the finance minister, the Bank of Japan president 9-10 months ago, and they've removed 5 different ministers from their portfolios, and they got a lot of problems going on over there. Let's see what else. I don't see anything else asked. That's all right. Let's go on to. So from the yen, let's move that back up again, right there. The yen itself is. One nice thing about the yen is added some strength to the Nikkei. The Nikkei is, hasn't been to its all-time high since 1993. So it's really disappointing to see that lack of growth. It's like some have made jokes. It's the carry trade. It's a 200 or 20 trillion dollar carry trade, and so it puts a lot of pressure on the markets. It puts pressure on there's a Nikkei right there, I believe, right there, and you can see there on the beta. Let's just show you that on the beta, so you can see our weekly and so forth. There's the weekly. We've been in a sell, and it's trying to lift. And you can see the daily is trying to lift up now too. Yesterday on that sell-off, the Nikkei did really well. So maybe money was sold out of the States and went to the some foreign investing. I mean, they are coming to the end of the year. It's important to remember that things are going to be totally different going into January 2nd. The whole marketplace is going to be changed because it's a whole new year. It always works that way. All right. Now from there, we go over to the great experiment. And that is the Euro Turkish Lira. Right there. Right. Right there. So you can see right there, it's the Euro Turkish Lira is over 32 at the moment. 32.12, almost 32.13. That's another closing high. If it closes here, it's another all-time closing high. And we've been looking for the 32.5 to 33 area, and you can see we had that wild spike over here, and you can see we're trying to climb up into it again now. That's the Turkish lira is really going through a lot of question marks, I guess you could say. It's been this big giant experiment by the former prime minister, now the president of the country. He's got some economic policies, and the currency's gone from 1 and change up to 32 and change now. So I'm not sure what his theory is, but it surely is needs more adjusting. Let's put it that way. It needs more fixing. Because when your currency goes from 1 to 32, ouch. So it takes 32 Turkish lira now to buy a euro, and it used to take 1 Turkish lira to buy a euro. All right. From there, we go over to the BRICS. We take a look at the South African rand. Let's see. Right there, South African rand. And when the rand is going down, that's usually strength in the metals complex. We'll put the rand up over here too to give you a little flavor of what it looks like. Right there, there's the South African rand. You can see it's been moving down. We did have that wild pop here for a couple days, and or one day, I guess you could say, and then it brought back down again. And this is the rand. So if the rand is going down, gold is going up normally. So we go over and take a look at gold real quick. We'll leave the rand up on there, and let's put it up over here. Right there. And there is gold. Gold has been sideways for, kind of in many ways, last 6 days. It's in a daily buy for 2 here, but not a lot of buying going on. Just kind of sideways action. I kind of thought that we saw a lot of strength in the gold complex because of the end of the year, and they were doing window dressing. We saw 5 central banks across the world doing a lot of window dressing, buying stocks, buying gold. Just trying to dress up their position, make it look like they were in the right side, because now the central banks are very competitive in the open market every day. All right. What else we got going on there, traders? We're going to be getting out of here soon. Let's take a look at silver. And there is silver. Oh, I just want to save the gold. Let's save that too. There it is. These are the type of charts we send out to clients. From there, we look at the silver. You see silver a little bit stronger, acting a little bit better. Maybe they're not hedging the gold as much. No. We find it very disappointing to see the way that the metals complexes have been beat up, especially the platinum. Let's see what we got here. SPY? Yeah, let's see what SPY looks like. SPY is up for the day. The bar is wrong. The high is wrong. The opening's wrong. The low's wrong. It's all screwy. Let's see if we can get it on a pre-market. Let's see what that does. And the setting. Let's see what we can do here. And let's put it like this. Regular trading hours, and then pre and post market. Let's do that like that. Yeah, see, that's all wrong too. Let's try one more. See if we can get it to clean up. It won't clean up until the New York Open. Unfortunately, it does that. There we are. Still not. Still all wrong. But we'll see. This could. It's going to be in a sell still, but it's just not going to be as deep a sell. That's all when it comes to the SPY. And that's, fortunately, the better look is, let's go over to, let's see, what is it? Get rid of that. We'll take a look at the S&P 500, the futures contract. You can see it there. That's accurate. You see it was near its highs. The daily sell is, went into let's grab this one. Daily sell went into a sell yesterday right there. And I didn't do it. I didn't adjust my position. I figured they're just going to turn back up, and they have. So I don't see anything really jumping out more than window dressing and end of the year situation. So, all right, traders, we are out of here. This is Doc from North America saying we will see you all tomorrow, same time, same channel, and that will be TGIF. It will be, thank goodness it's on Friday, because then we get a 3-day weekend around here, so we're real happy. All right. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Arrivederci.